In today's video, we're going to discuss down payment, closing costs, and how the two are different. Stay tuned. Today's episode is going to be short and sweet. We're going to explain some of the differences between closing costs and down payment because they are two very different things. Down payment is the cash amount that you are wanting to put down towards the home purchase. That is all that it is. So it is very different from closing costs. So down payment equals cash. You can put any percent down. So if you have down payment assistance programs, they can usually cover 3 to 7% depending on what program you have qualified for. So check with your lender for that information. So typically 3% to 20% down, depending on your finances, can be even more. 20% is important just because it removes the private mortgage insurance from your monthly bill. After you own 20% of that number is removed. So it's just good to remember that one is something important. Closing costs, though, are very different from down payment because these happen with all transactions. Closing costs both sides have closing costs. Closing costs to the seller, to the buyer, everybody kind of splits certain costs, certain fees, certain recordings. So the main things that you're going to see when you see closing costs are loan fees, like origination or just other miscellaneous lender charges. This is why it's important to pay attention to the lender that you're using so that you're seeing what miscellaneous charges are actually adding to your bill. So it's good to always double check that. Recording fees. So all of this stuff does have to be recorded with the cities and the counties. So all the recording fees. Lawyer fees are another big one. So then you also have taxes. So usually that is prorated. You'll see those pop out on the thing for the sellers or for the buyers. So you're going to either get charged, usually it comes from an escrow account that you've been paying into, so the sellers will get that money back, but you are going to be charged that during the closing cost process. So it's important to understand that if you've been in the home for 6 months, you're going to pay those prorated taxes to the buyer as closing costs. Documentation charges. So these are kind of like recording fees, but they can be just miscellaneous to different departments. Depends on where you are and where the house is located, those kind of things. So you will see those. Title insurance is a big one. Title insurance just covers you in case there's something wrong with the title that wasn't caught during the closing process. So it's super important to have it, but it is one of those little extra closing things. Closing cost fees are typically between 3% and 6% of the total cost of the home. So it's just something else, an important number to kind of keep in mind, that you're looking at about 3 to 20% down and 3 to 6% to close. So good to have those kind of estimates in your mind about what you're going to need to bring to the table. Definitely talk to your lender. Your lender is your partner on this part. So you're not having to navigate this alone, and let's find the best deal for you. The other thing, the reason that these two are very often confused or mixed up as in what they are, is that usually it's one wire or one check that's due at close, and it encompasses all of this. So they end up lumping them in together. So if you end up getting a credit, you may have to bring less for the down payment because they can balance each other out. But they are definitely two very distinct things, and it's important to kind of understand the situation going on between both. Thank you so much for watching. Make sure to leave some comments below to tell me what you thought, or if you have any questions about what we talked about today. Also, make sure that you hit that subscribe button below so that you can keep up with any updates that are coming in the future.